Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, September 13th, 5:20 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. Went back to that yesterday after a continued strong move off of the shakeout low of Wednesday. Check the trend gauge over here. We've got the coveted four green arrows, market leadership on green, short term. All five of the major indexes reclaiming their 21-day moving average, medium term, also reclaiming the 50-day moving average, long term, staying above the 200-day moving average. So, what happened today? Third day off the slingshot low from Wednesday morning. Mid and small caps led today as opposed to big caps leading the prior two sessions. Here are the final numbers. The 21 over 21 up a little less than 1%, 15 up, 2 neutral, 4 down. The big eight up a little less than 0.5%. Big cap tech with a little bit of a rest today. But the RG8 picked up the slack, up 1.7%. This is our 8 growth ETF composite. I'll go through those charts today so we can take a look at them. S&P 500 opened up about 0.1%, put in the low within the first 5 minutes, and just worked its way higher most of the day, basing most of the afternoon, but still up 0.54%. Equal weight up nearly 1%. So the breadth was there today. Today was an 85% up day on volume. NASDAQ 100 up 0.45, equal weight up 0.8, Dow up 0.7. Here are the strong indexes of the day. The mid caps up 1.7, Russell 2000 up 2.5. Global diversified 60/40 stock and bond up 0.37%. Our flagship GROTECTION portfolio up 0.56%. Some of the recent leaders we bought into took a little bit of a break today. Let's get to the charts. Let's start off here with, all right, I got the NASDAQ 100 up, so we'll start with that. You can see the relative strength exhibited this week, not today, but earlier in the week, and clearing the 21-day and the 50-day moving average. The only thing not perfect from this setup is we want to see this green line, the 21-day, get back above the 50-day moving average. The 50-day moving average still sloping down. And again, this is a hangover kind of from the relative weakness that we've been seeing back in the beginning of July in these stocks. Let's go to the S&P 500 and let's bring in the 15-minute chart here, and you can see there's the big final shakeout Wednesday morning after the debate, after the CPI report. Where did we bottom? Right above 5,400, and then boom, slingshot higher. The last 4+ hours of Wednesday, trend up day Thursday, trend up day most of Friday, basing in the afternoon. So pausing at this 56.36 high. Next level that we want to get to is this band of resistance between 56.52 and 56.69. That is the band of resistance to work through before we get to all-time highs. Hard to believe after a 4% up week. Really, I should say a 4% and real 4% move up just from Wednesday's lows. Now within less than 1% of all-time highs on the S&P 500. We got the 8 above the 21, above the 50, above the 200, just the way we want them to be configured. Dow Jones Industrial Average approaching all-time highs after its Wednesday morning shakeout to the 40,000 level. Now the laggards recently, but leading very clearly today. Small and mid caps gapped up at the open, closed at the high of the day, regaining their 8, 21, and 50-day moving averages. What we'll be on the lookout for next week is that any pullback in mid cap should hold this 21 and 50-day level. Now let's go on to Russell small caps, the winner on the day. Again, a gap up, reclaiming the 8, 21, and 50-day, and any pullback should hold today's lows, as that will correspond with the 21 and the 50-day moving average, which 50-day still turning higher, Still trending higher. The 21 reversed with today's power and is now pointing higher as well, along with the 8 day. So any pullback should find support around this 2150 level. Let's go to RSP. Outperformed today, weaker earlier in the week, and again, that's because of the outperformance of the Nasdaq 100 Magnificent Seven. But a gap up and close near the highs. Can't ask for much more. Also within shouting distance of this 176 high from a couple of weeks ago. Those are the major indexes. Let's go to the VIX, doing what we want with a 16 handle again. Ideally, we want to see it back below the 16 level, but hey, good enough for now after a spike up last Friday after the ugly Friday closed to an ugly week, down 4.25% last week on the S&P, up 4.02% this week. So reclaiming most of last week's lost. This market is can make your head spin sometimes. Let's go to the U.S. dollar lower. That's a tailwind for the market. Not by much, 0.05%. But we want it to stay in the bottom part of this range as it's basing here. So this is something that we'll keep an eye on. We want it to stay below the declining 21-day moving average. Some winners on the day. Gold, second gap up, all-time highs, up 8% on the day. We bought Nugget yesterday. That is a leveraged GDX where we were rewarded with a gap to new highs today on GDX and Nugget as well. Silver, SLV, a second gap up almost 3%, not a recent high as yet, however. Bitcoin starting to show some strength, regaining the 21-day moving average just below the declining 50-day moving average, up 2.4%. We took a derivative of this after poring over some charts. We'll talk about that when we get to the tail of the tape. Let's see what's left. Bonds, BND. Bond prices picked up a bit. If they're picking up, that rates are coming down. TLT, we own this up a little bit. As long as this is riding the 8 EMA, we'll probably stick with it. But if stocks continue to act well, we would liquidate this to put money into better performing names. There's times to be in bonds and there's times not to be. Right now is the time to be because the trend is to lower interest rates, which means higher prices. But why diversify into them if you can get a better return in stocks? We don't diversify just for the sake of diversification. We want to go where the bigger money is made. Bonds, we'll park in them if stocks aren't working and bonds are working, but that's not the case right now. But that case changed just from Wednesday morning, no question about it. The end of day Friday, bonds were looking a lot better than stocks. Here we are 1 week later, and stocks back to within 1% of all-time highs. Let's go to the rates. TYX, the 30-year yield down 0.45%, and the 10-year yield down 0.82%. All right, so that's our inter-asset correlation. It is Friday, so we're going to bring in the charts, the weekly charts, so you can get a look at what the weekly patterns are that are working and the return for the week. First, we'll go to the tail of the tape, however. Some good stuff here. Stochastics now pointing all higher on the 5 indexes, 6 indexes if you include the RSP. All 8 of the RG8 stochastic has flipped and is showing momentum to the upside. NASI RSI also flipped. That's a positive. These are all tailwinds. Back on the bull case with the move back above the 21-day exponential moving average and powering through over the past couple of days. Next week, FOMC on Wednesday. Right now, we've got a 55% of a 25 point basis cut, 25 basis cut, basis point cut, or a 50 basis point cut, 45% odds of that. So that could make for some fireworks if it's 50-50 split going into the meeting. Maybe the Fed will tip their hand. Keys coming into today. 56.52 overhead resistance on the S&P. We're still below that despite the nice day. 475 resistance on the Qs. We're basically just above it, closed at 475.34. Leaders strong for the most part. They were. Some of the leaders we held pulled back, but for the most part, a decent day for leaders. Day count, 5-day up now, third day above the 8 EMA and 21 EMA. All afternoon tight range. How about sectors? 11 out of 11 spider sectors. We were strong across all sectors. We were strong across all market caps. And we were kind of strong or split at least among growth versus value. So 11 out of 11 spider sectors up, led by semiconductors, home builders, gold and silver stocks, retail, biotech, and banks. To the downside, yields, the dollar, and IGV because Adobe gap down on earnings. That's a big component of IGV. In-house in the portfolio, we trimmed some SPLG and moved that into TNA. So trimmed a little bit of large cap, moved it into small cap with the strong move above the moving averages. Look, we're looking for some continued momentum on that next week. And the derivative Bitcoin play, MSTR MicroStrategy, massive amounts of Bitcoin on their balance sheet. This moves like a leveraged Bitcoin play. So we took a starter position in this. Net, our beta up slightly on the day from 1.24 to 1.27. Monday, what are we looking at? S&P versus the overhead resistance band, 56.52 to 56.70. And which index is going to show relative strength? Earlier in the week, we had big cap tech. Today, we had mid and small caps taking the lead. Let's see what next week will bring us. But the bottom line of the day 3 of the slingshot move higher from the Wednesday morning shakeout, led by mid and small caps. Let's get to some charts now. As promised, let's go through the RG8. So the RG8, 8 growth ETFs, we created this composite in mid 2021 to help us after a period of underperformance where small caps popped after a very strong move higher in 2020. They topped in February while the rest of the indexes stayed higher. We think we could have caught that turn a little bit more, so we came up with this as a method to keep our eye on what's actually going on in all of the small caps and really all the momentum names as well, the ponds that we fish in other words. So here's IWO, and I'm going to bring in the daily stochastic here so you can see we've got the stochastic turn there. You're going to see 8 out of 8 on the stochastics here. So IWO, this is Russell 2000 growth half. SLYG, this is the S&P 600 small cap growth half. See the stochastic hook up in 3 days up. MDYG, mid cap 400 growth, same stochastic move higher. QQQJ, this is a mid cap NASDAQ 100. Same setup here. So we're seeing certainly seeing a trend here. PDP, this is the Dorsey Wright Momentum ETF. SPHB, this is high beta S&P names. Same thing. And the two that we pay the most attention to because they're comprised of one actual leaders, the other perceived leaders, FFTY, this is the IBD 50. We got the cross up. And Art K, Kathy Wood, not always in the leaders, but we like when this is trending in the direction of what we invest in. And right now, Art K is actually her portfolio not so bad right now compared to what it looks like sometimes. Art K up 10% on the week. So that's the RG8. Let's go now to some winners and losers from the 21 over 21 list. Well, let's go through everything that we own in the portfolio. Kava took a rest today. Let me get stochastics off here so you can get a better look at the chart. Forming a nice little cup, pulling back near the top of that. Certainly a market leader. TOTL, this is the bond fund that we picked last week, and we also added TLT. ServiceNow, we bought this rest day today after moving out over the past 2 days. There's TLT, we already showed that. Oracle, big gap up after hours. They raised their guidance for fiscal 25 and 26, and initially it gapped up 7%, gave most of it back, unfortunately. but still up slightly on the day. You can see that big gap up after its earnings report. Why they just didn't give that guidance 4 days ago when they reported earnings? That's a question that quite a few people are asking. Here's NVIDIA regaining the 8, 21, and 50-day moving average. Nice tight range, low volume today. This is the market's going higher. This is going higher. Very nice tight range today. Nail, there's the gap up. That's home builders. Nugget, there's the gap up. That is gold stocks. Both are leverage plays and MicroStrategy. That's what we own. How about the biggest up stocks on the day from the RG8? Affirm continues to be a champ, bouncing off the 21-day moving average. GEV, they raised guidance. It initially sold off. That would have been a great entry point. Up another 5% and almost 14% for the week. And how about down? The stocks that were down today in the 21 over 21, the laggards. Sometimes the laggards are where you want to look for entry points. Here's Nutanix, not showing any relative strength, unfortunately, after its earnings gap higher. Axon, nice pullback on lower volume after its big up move and breakout yesterday. Ferrari, no relative strength after being a champ and just riding the 8 EMA higher, pulling back. Not the best pullback that I'd like to see. This is probably going to come off the list while it hangs out around the 21 day moving average here. And CBOE, good looking chart, serious relative weakness. This seems like it's more of a defensive play. Note it underperformed the last 3 days while growth stocks were moving higher. This is a financial, so with not massive growth, consistent sales and consistent earnings, but 3 out of the last 4 quarters, a decline, year-over-year decline in sales. So that'll probably end up coming off of the list. And with that, I'm going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client. Dan, my partner, Dan Stewart, dan@revereasset.com is the email there. And a reminder, our flagship portfolio, GROTECTION, serves a dual mandate. Participate in market uptrends. Get out of the way. First, the market usually goes sideways, but you break the 21, you break the 50. There's a chance for a bigger pullback. When the market's going sideways, normally we get stopped in our leading names when this happens, down to 3 names before we re-engaged this week, but always keeping that core exposure to the S&P 500 as long as you're above the 200-day moving average. No fear of a bear market until you get below that level. So we let the S&P battle it out between the various sectors and the heavyweights and the lightly weighted names. Keep an eye on what's going on with the equal weighted. And when the dust settles there, we go into the leaders. And with that, I'm going to wrap it for the week ending Friday, September 13th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great weekend.